Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so I hope all of you had a great Easter break. Our market was closed for two sessions, so the Friday night and the Monday. So our market, though, shot up quite a bit today after those holidays, a bit more than what our futures were expecting. We did hold on to all the gains, though. We did pull some of those gains back to close, kind of around resistance here at 75.65. So at this point in time, I'm still counting that as not a break. It's close. It's probably the closest we've had through this period here of breaking that next resistance level, but we're not quite through yet. Tonight's the night, guys. If the US has a nice strong night, or if we have another big move in commodities tonight, our market could finally shoot up and test the all-time high. We haven't been back to all-time high levels really since back in 2021. Around August of 2021 there. So it's been a little while. We did have one go at it after the sort of the first push back up after COVID, and then since we had another kind of a go at it, and then this is probably going to be the third attempt. At some point, I think we'll get through, guys. Okay, at some point, I think we'll get through. All in all, we're not trading too much higher than when we started, when the big COVID pullback happened, compared to the US, which is, almost double where they were. So look, it's going to be interesting. I think we're due a break into all-time highs at some point soon. I don't know if it's going to happen this round. It might be that we pull back a bit through May and then have another go at it, sort of coming into that August reporting. And that's quite typical to our market, guys, by the way. We usually have a bit of a push up into that May period, which is what we saw here. We saw a massive drive through March, a little bit more into April, or almost in May. We see the banks report, so ANZ, NAB, Westpac report early May. Then everything pulls down. Okay, that tends to be the typical seasonal pattern. This year could be a little bit different with the election. All right, that's the big question mark. It is an election year, and that could change the dynamic of May a little bit. May not. Only time's going to tell, guys. But that's kind of the typical expectation, is a pullback in May. So at the moment, technically, we're looking a little bit bullish. If we clear this level, then I think, we'll come up and test that blue sky, see whether we can get through that blue sky resistance or not. That's going to be the test, guys. That's the $1 million test right now. US market, all right, get ready. It looks very different to our chart. Take a bit of a mind shot of this. Okay, now let's have a look at this. It's very different. Okay, so we're completely disconnected from the US at the moment. I'm going to talk to why that is in a moment. But for now, let's just stick to technicals. Short-term trend is down, heavily oversold on the S&P 500. We're not, we're kind of testing key support levels here, and we'll see whether we're going to crack through or not. With the futures up at the moment, I doubt we're going to crack through tonight. So at this point of time, support after a bit of a downtrending move, heavily oversold. Complete opposite to our market that's been in a short-term uptrend, heavily overbought. Okay, polar opposites at the moment in the short term. Now, the thing I'll point out though is that is the high of pre-COVID. Okay, if we take a measurement to where they are now, okay, I'll just quickly look at that. Pre-COVID to now is sitting at about 30%, guys, 30% higher than pre-COVID levels. If you come back to the XJO and do the same measurement, you're going to see something very, very different, I believe. So that's your top of your COVID. To where we are now, we are hovering at about, I can't see that on the chart, maybe 5%, guys, about 5%. Quite a bit different, isn't it? Yeah, quite a bit different, 5.2%. Very different to the S&P 500, guys, which is up a lot more since pre-COVID times. All right, so let's get into some of the reasons why this market's moving around. Okay, so for one, commodities are rising. So across the board over the weekend, that's the big thing that changed. Okay, so we saw crude come back to 107. I think that crept up to 108 through today's session. We've seen, so energy in general, natural gas was up quite a bit over the last week. Copper back not far off the all-time high. Okay, not far off at all. That's a good gauge for metals. Gold was up, so all pushing higher. So metals, industrial metals, iron ore's holding strong at 150 odd US a ton. So across all that infrastructure sort of side of things, infrastructure type commodities, very, very strong at the moment. Okay. But not only that, you had all the agricultural commodities rising as well: wheat, corn, oats. All of that space was up quite a bit over the last week. So when commodities are on the rise, markets like ours tend to outperform. Okay, that's the big thing. We're a huge exporting country, guys. Okay, we produce and we export. That's what we do in the mining, in food. Uh, you know, we export a lot. That's a big part of our economy. So naturally, if prices are going up, then that helps our economy out and it helps all of the stocks on our market as well. I think that's why, well, that's one of the obvious reasons why our market is outperforming. The other big thing that happened over the weekend is the Aussie dollar actually fell. US is rising, US dollar is rising, Aussie dollar is falling. It's very rare to see the Aussie dollar falling while commodities are rising. Okay, so that's a double positive whammy, right? If you think about it, that's double positive. You got the Aussie dollar falling whilst commodities are rising. Of course, people are buying into our miners. It makes sense, guys. If you really think about it, that completely makes sense of why we've disconnected to the US markets. So at this point of time, as traders, especially short-term trading side of things, you can't lean on the sentiment coming from the US. You just can't. You've got to divide that at the moment. Usually we follow a lot in the short term, but at the moment, no. Okay, stop leaning on US futures. Stop leaning on what the US market's doing right now because it's not going to make much difference. You've got to be following the commodities market and you've got to be following the Australian dollar and what that's doing. Okay, with the Aussie dollar falling, commodities rising, naturally people are going to be buying into the Australian market. It just makes a lot of sense. Okay, all right, so obviously, as commodities rise, the inflation issues continue, and that inflation issue is much larger, or it's perceived to be much larger in the US right now than locally. We're yet to know how this is going to really affect Australia. We don't have a clue, to be honest, right? The best thing that's happened to us right now is the current government has dropped the fuel excise. So we're not feeling the pinch on the oil price being above 100, that's for sure. We're overseas, they're feeling the pinch, guys. Okay, so our inflation here is still somewhat in check. In the US, it's all over the place. It's huge, guys. They're huge. It's the highest inflation they've seen since the early 80s. Okay, with that inflation running hot in the US, there's an immense amount of pressure on the Fed to raise interest rates, which, in my opinion, is not going to do a whole lot. All right, it's going to kill the economy. It's going to send us towards a recession, or send the US economy towards a recession, not ours. So we're a commodities-based country. We probably won't go towards recession in this environment. But the US economy definitely could. It's a consumer-based economy. You lift interest rates up, you slow the economy down. You're gonna not gonna yes, you will help the inflation issue, but you're not going to solve it. The inflation issue is, to me, more of a supply chain problem. Okay, demand couldn't be much higher than what it was pre-COVID, but supplies are definitely a different game right now. So with supply chains issues around the world, with what's happening in Ukraine and Russia, which is putting more pressure on that again with the higher crude prices, well, of course, there's going to be a big problem there. The Fed increasing interest rates may not be the problem, but may not be the solution. It may actually make some make some bigger problems for the US, right? What the RBA does next, we'll find out, right? I think it's just going to take time. I think the RBA is not going to be as keen as the Fed in raising rates. I think they're going to drag their feet as long as they possibly can, and for good reason. Okay, but watch this space, guys. Equity markets are heavily geared towards what happens in bond markets and what happens around the sentiment towards inflation at the moment and interest rates. The mood right now is interest rates are going up and they're going up quickly in the US, and the markets are pricing that in. Okay, so at what point does that switch back around? Okay, that's the big question you've got to be asking yourself, because at some point the mood will switch to, okay, well, rates have peaked and inflation's peaked and it's all going to come crashing back down. What does that mean for the equity market? Okay, that's the big thing that you got to think about here. And that's to my next topic of conversation is value versus growth right now. We are a value-based market. What does that mean? That means that a lot of our companies, our top companies in our market, they've got good PEs. Okay, so price to earnings are strong. They've got positive earnings. Okay, they're proven companies, and most of them are exporters. Okay, they're basically miners. Okay, pulling stuff out of the ground and exporting it overseas, or they're agricultural. You've got banks, which our banks are probably the more safer banks right now, offering a really good yield. So, if you look at your top stocks, most of them are value-based stocks that offer good dividends and have got strong, consistent earnings. Okay, that's what a value stock is. A growth stock, on the other hand, is usually a younger stock that is in a growth phase. So, what you're looking for out of those types of stocks is that they're negative earnings. They're usually borrowing money or raising capital to keep the business going. But their revenue is increasing by 50 to 100% every year. That's a growth stock, guys. That's kind of the definition of that. Now, in this environment, you've got to ask yourself, where do you want to be? If interest rates are going up, which is going to slow economic growth, okay, where do you want to be? Do you want to be in a slightly unproven concept that you're relying on an immense amount of growth every single year to maintain the share price, or you're happy to go for the value side where you're going to probably going to get a much higher dividend, slower growth, but a much safer asset that's going to probably do extremely well while interest rates are going up? Where do you want to be, right? Right at this second, the way people are talking, you want to be in value. Okay. At some point soon, though, the shift will go from value back to growth, and that's what I was talking about before. When the view on interest rate changes, okay, you want to be moving back towards growth as well. Okay, so you'd sell some of your value, go back towards growth. That could be later this year. It could be early next year. I can't tell you the timing of that. But the dynamic right now is value be on the value side. Okay. Not to say growth's not going to move around. Value should outperform in this environment, is what I'm saying. So the next big thing this week, and what the market's going to be focusing on this week from a US perspective, is reporting. It's going to give us a lot of hints of how things are going. It's going to let us know how these companies are going in the last quarter, given the drastic lift in pricing. Okay, so everything's gone up, guys. The cost of goods have gone up across the board. Labor in the US has gone up across the board. How's that affecting companies? Okay, we'll get a hint of that this week. All right, so far we've seen US banks report. It's been a bit of a mixed sort of reaction. JP Morgan's down. Goldman Sachs is pretty much even to where they were before they reported. So banks are really not doing a whole lot on the back of their reporting. But we'll see Netflix tonight. We'll see quite a few big names throughout the week and next week. So yeah, definitely focus is going to go towards US reporting. Locally, we have a little bit of reporting going on throughout this month that you need to keep an eye on. In particular, you've got the miners doing their quarterlies, energy stocks doing their quarterlies. But coming into early May, you'll have 3 of our big banks reporting as well and going ex-dividends. So all of that you need to keep an eye on from a trading perspective as well. And just see what happens. Baker Queensland dropped quite dramatically after its reporting. So if there's any sort of sign of what's happened so far, the bakes might come off a bit after the reporting in May, guys. Okay. Look, that's the main thing for me right now. There's not a lot of actual economic reporting this week that I'm too worried about. We've got some job numbers later in the week from the US, some inflation numbers from Europe, but nothing too major, guys, in the way of economic reporting. I think it's going to be more company earnings that people are going to be focused on this week. That will take the spotlight, as well as whatever keeps happening in the commodity space, guys. The commodities go up, it puts pressure on inflation, puts pressure on the growth stocks in the US, but it puts upward pressure on our commodity stocks locally, so our miners and our agricultural and things like that. So just got to think commodities up, positive Australian market, negative NASDAQ stocks. Okay, that's probably the real story out there at the moment. Okay, until we start hearing a bit more behind the Fed, which we'll hear in 2 weeks' time. Early May, okay, we'll hear from the Fed and we'll hear from the RBA again. So that's until then, I think the focus is definitely going to be on US reporting. All right, thanks for listening into today's video, guys. You take care and bye for now.